Okay, good afternoon, everyone, and thank you for joining us today for this session, which will be on intraday options. How can we trade basically intraday options using order book data? So I'll just give you a brief of what you'll be basically learning in this webinar. So we will look at the order book data, what exactly is the concept of order book data. And with order book, I will mean full depth order book of how institutional traders or HNIs or prop traders basically use that data, and similar kind of a data now can be used by retail as well. So we'll look at that data and what that data will tell us, or what will be the summary of that, what is the agenda for looking at that data is basically how we can find intraday trade. Purely it will be on an intraday basis, mostly because that's the best time frame when it will work properly. So how we can go and find some intraday trade for both buying. So let's say if you're a buyer, then you will be using this data to find opportunities and go and take a trade. And buying options is a very less risky game. And when the trade is intraday, then you don't even have to think of Greeks, because mostly buying the ATM option will give you the highest kind of absolute profit that can be made. And the margin requirement in option buying is obviously very, very low. So you don't need to complicate the game. It's very easy. You can just identify these opportunities and directly go and take a buy trade. Now, on the other side, even for option sellers who are not willing to buy options, but who generally sell option, and I've met a lot of option traders where they have a static rule, or maybe somebody might have a dynamic rule where they're selling options. So how the order book data can be useful for them is that they can also use this data as a risk management, right? So for option writers, what happens is that most of the time you will go right, but sometimes you'll go wrong, and that sometimes can take away very huge portion of your profitability, right? So option writing is majorly a risk management game. So if we can identify if there is a sudden spike in buying, maybe calls or puts, or either way, it can happen in any direction, both of the directions. So whenever that kind of an opportunity is happening, then maybe as an option writer, you can use this data to exit your trade, right? So you know that there's a big movement that is expected on that side. So you'll not want to participate, and then you can go and basically exit that trade. So even though we will look at Nifty, BankNifty as an example, but or maybe I'll try and include one of the stock as an example. But basically, this data will work on any instrument, right? So we have all F&O instruments that are there in this. So you can use this on futures as well as options, right? So just to summarize, for option, this data is useful for both option buyers and option sellers, where option buyers can use this to identify opportunities and go and take an intraday trade. For option sellers, you can use this as a risk management tool, where whenever you see a breakout happening in a option that you have sold, then you can manage the risk by exiting that trade, right? So let me give you first a background of what order book data is, and then we will see some examples of what the concept is, right? So this data is basically a absolute tick by tick data with is an analytic on top of a tick by tick data which the exchange provides. But because this data is so large, right? So I think about 400-500 GBs per day is what the data is. So this data is so large that it cannot be disseminated on an internet generally, right? So that's why exchange provides it on a co-location, which you all might have already heard. It has been very popular of late, right? So this data is provided in co-location, and anybody can go and subscribe to this raw data. But doing something like this is very expensive for a retail trader, because if you go and spend crores of rupees in setting up this entire infrastructure, buying the data and setting up the racks and doing it, and still maintaining the low latency. So this is good for institutional traders, where they can spend so much of money and they can invest a few crores in setting up this infrastructure and building these analytics. Or maybe for HNI traders or prop traders who can invest that kind of a money. But for retail, this kind of a data was never available, right? So retail traders never had that kind of an insight that can I go and look at the complete order book and not just the raw data, but directly can I get an analytic which is tradable and I can go and make my decisions on top of it, right? So in our platform, I think we might be the only platform in the country which is providing this kind of a data on a real-time basis to the retail traders. And with this kind of a data, basically retail traders also come at par with what, not exactly at par, but at least good enough for being at par with how the prop traders or HNI traders or institutional traders are basically using this data, right? So this, uh, if you have this kind of a data, then I think you'll be having a parity, at least some sort of a parity that retail traders can also use. So I'm sure that everybody might have observed, at least this has happened to me a lot of time when I used to put manual orders, right? So what happens is that if you notice, or even if it is an algorithm that you are using, if you notice, if you place an order at, let's say, 100 rupees for something, a decent quantity, then immediately you'll see that somebody will come. Somebody means not any kind of an operator. There's no operators in the market which can go and operate Nifty, BankNifty, or things like that. The market is huge, but somebody means that algorithms which are placed, automated, and in co-location. So they'll come and they will kind of overrule you, where they'll place a bid at 100 rupees, 5 paise, right? So if a trade happens, then it will not come to you, it will go to him. And why is that happening? Because the visibility of your order is also available to them, and they can see that, okay, you're ready to buy this much quantity, and they'll keep jobbing it continuously. And generally, you'll see that if you place a decent order, then you don't get to buy anything, and still the prices are going up, and then you'll chase, and then you'll go and maybe convert it into a market order and go and buy it, right? So that kind of a thing happens with everybody, where if you're trading in a decent quantity, you'll see something like this, right? So even if you're not trading in a decent quantity or a big quantity, at least this is the behavior that happens, is what I'm trying to explain. So what happens is that if you see this data of how the order or everything works, so let's say if I, as a retail trader, go and put an order on the exchange, that will get executed at the exchange level. And before I receive the order confirmation, there's a very good possibility that all these institutions who are placed in co-location will receive that confirmation much before you receive your own orders confirmation. It's not that exchange is showing any kind of a bias, right? But what happens is that the data packet is released to everybody at the same time. But what will happen is that because they are placed at a very low latency, so they will receive the data first, and your own trade confirmation will first go to the broker. They will have some sort of a disseminating mechanism, and then by the time it reaches you, obviously it is taking some decent latency, and that's why you will receive your own order confirmation much later than how the institutions will receive your order confirmation, right? Or even if it is pending or if it is executed. So that is the kind of edge that people have using this data. So let me directly jump in and explain you how this concept works, right? So what is order book data all about? There are many of them. So in the application also you have 33 plus order book data that is integrated, but I'll explain only 2 of them for today, which are simpler to understand and very, very effective, and you can start using it maybe immediately after this webinar. So let me show you, let me explain you what this concept is all about. Okay, so I'll just use a whiteboard for this. Yeah. Okay, so let me just minimize this. Okay, so let me show you a screen which you all are familiar with. So you all might have seen a screen like this at the broker. Whichever broker you are using doesn't matter, but generally you will see a screen like this, where you'll see that maybe 1,000 quantity. So let's say if I'm talking about Nifty, 17,500, let's say call option. Okay. So if you see a call option, order depth, right? So you'll see that this is what? This is the volume, or maybe not, sorry, not the volume, but the quantity will be the right word to say, because volume is only when it gets traded, right? So this is the quantity, and maybe this is standing at 100 rupees, and you have at 100 and 100 rupees 50 paise, somebody is willing to sell maybe 500 quantity, right? So this is called bid and this is called ask, okay? And this is the seller's quantity. This is also the quantity. So this is the screen that you all have seen. And let's say the next one might be 99.85 and somebody is willing to buy 2000. And then the next one is at 100 rupees 80 paise and somebody is willing to sell 1500, right? So all this way, you generally see this kind of a data, right? So at the broker's level or on the broker's terminal, you see best 5 bid, best 5 ask prices. Generally, this is what you will be able to see at the broker level. And some brokers might be providing you best 20, right? Best 20 bid or best 20 sellers, which are there. But the fact is that if you have the complete order data, right, then all the orders that are there with the exchange, people have visibility to that, not just the best 5 or best 20, but all the orders that has went to the exchange on the buy side, on the sell side. You can see everything if you have subscribed to that kind of a data from the exchange, right? And that's the data on top of which this analytic is basically built. So you'll be able to see everything, right? So looking at the broker's terminal will not give you an edge because it's a very basic data on the broker's terminal. But when you look at the full order depth, then that is what basically what I'm talking about. Now let me explain you the difference between order and trade, right? So what is order? This entire screen that you're seeing right now is order book. Why order? Because this has still not been executed, right? This is not executed. This is in the system. And unless either the buyer increases the price or seller reduces the price and people come to an equilibrium, a trade will not happen, right? So this is an order. And if the order matches, then it becomes a trade, right? So this is why we say this is an order book, okay? Now, let me ask you, is there a difference between somebody buying at this price compared to somebody buying at this price, right? So when a trade happens, is there a difference between whether the buy order got executed at bid or the buy order got executed at ask? Is there a difference between that? Obviously, there is a difference. And if the order is getting bought at bid, it means that the buyer did not have conviction. And in fact, the seller had conviction that it might go down. So he came and sold it at the bid price. Whereas when the trade is happening on ask, it means that the buyer has more conviction and they are ready to buy at the ask price. So even though there is a 50 paise difference, but he is ready to buy at the ask price. And continuously, if the orders are happening on, or the trade is happening on ask, what would that mean? That would mean that the buyer is aggressive and the market maybe as a whole has some information that you don't have, or maybe the market is changing its equilibrium and tending to go up, right? So what we have to basically understand is whether in generally a broker's terminal, you cannot find this kind of a data which can isolate whether the trade happened at bid or the trade happened at ask. You cannot see that data, how much quantity got traded. So this analytic, basically we call it a buyer initiated trade. What does a buyer initiated trade mean? A buyer initiated trade means that buyer initiated that trade and bought at ask. And how much quantity did he buy? We can plot that data in real time, and that is what we'll be basically doing. And similarly, when we look at seller initiated trade, that basically means that the seller reduced the price and sold it to the bid price, right? Not at ask, but the bid price. And that's why we are saying that sellers are now in control and sellers are aggressive and they are selling it off. It's very simple, right? Simple logic that if the orders are getting bought at ask, it means that the buyers are aggressive. If the sellers are selling it at bid, it means that the sellers are aggressive. That's all we have to identify, because everybody might have heard that the entire market works on demand and supply. So this is a very basic demand and supply that we are trying to understand. How much is the demand and how much is the supply and who is leading, right? Whether the demand is more or the supply is more is what we are trying to solve using this data point, right? So I think that everybody is with me so far. So now let's understand how will a trade happen, okay? So the trade can basically happen only when this buyer, okay, this person who is standing on bid, increases the price and goes to 100 rupees 50 paise and goes and then the trade happens, right? So if the existing buyer increases the price, or maybe that a new buyer comes and buys at the ask price. A new buyer came and instead of putting at bid, he directly said, okay, somebody is ready to sell at 100.5, I'll go and buy at 100.5, right? So there could be two scenarios that the existing buyer is increasing the price. So that also means aggression. Or a new buyer comes in and buys at the ask price. Now there are some kind of orders which can basically not give you the true picture. So I'll give you an example. Like there's something called as an IOC order. So what does an IOC order mean? IOC order basically means immediate or cancel. So this kind of an order generally never sits at the order book level. So it never goes to the order book. It directly executes. And if it is executed, it's a trade. If it is not, it is auto cancelled, right? It does not sit at the order book and directly it gets either executed or cancelled. So generally you will not be able to see IOC orders on this screen, above screen, right? Why? Because it never sits in the order book. But if a trade is happening at the ask price, if somebody is trying to put IOC orders continuously, you never see it in the screen, but the trades are happening. So we can identify that also. And then the second kind of an order could be disclosed quantity, where maybe this buyer who is showing that he wants to buy 1,000 quantity, wants to buy 10,000 quantity, but he's disclosing only 1,000. So that is also a functionality that the exchange provides, and you might see it on most of the brokers terminal, that you can go and place 10,000 quantity, but disclose 1,000. So what will happen is automatically in a batch of 1,000, it will get executed. So nobody will ever have a visibility of how many orders are basically pending in the system, right? So, but ultimately, if the trade is happening at ask, then that will mean that this buyers are aggressive, right? So let's summarize what we have learned so far, so that when we see those charts, when we see that data, so we are at least clear with the concept of what the concept is. The concept is very simple. It is based on demand and supply. How much is the demand? How much is the supply is all we are trying to understand. How are we doing that? We are doing that by identifying whether the buyer is aggressive, which will mean that the trades are happening on ask price, or is the seller aggressive, which means that the seller is reducing the prices and willing to sell. It basically means that the trades are happening at the bid price. So the moment we go and identify these two data points, we can plot it on a real-time basis, and we can then directly say that whenever the buyers are aggressive, I'll go and participate and I can go and take a trade. Now, let me explain you the trade setup before we go and see that data. It's not complicated. We are going to use very easy stuff. So generally, there could be two types of trades. One is that the market is already trending and you see some kind of a, I've not spoken about what the data will look like, but let's say if this is the, oops, let me just read those. So let's say the above is the price and below is the volume, not the volume bars will be, I'll show you what this data will basically look like. So if this is increasing, then even in a trend, we can identify that there's a buying opportunity. But the most lucrative trade is when the instrument is sideways, and then let's say if there is a breakout on the upside and you want to validate whether this breakout is genuine or not, or is it just a whipsaw? So we can validate that as well using this data. And as I said, for option writers also, if you have sold an option and if that has started witnessing a lot of buying, then you can immediately go and use that as a risk management for yourself and exit that trade, right? So what I'll do is let me directly go to the chart now and the tool now, and I'll show you how we can use it. So I'll go and click on this, which is chart, order and trade, right? So this has chart plus the order and trade. So I'll just click on that. And you can see that by default, I have the data for Nifty and I have this indicator plotted, but for now I'll just remove it so that I can just plot it again and show it to you of how this data looks like. So let me go ahead and remove this for now. let me just plot a Nifty rolling chart. So rolling, basically, if I choose this, it includes all the expiries of Nifty, right? So I'm using a Nifty rolling chart. So if you see over here, there is a Q indicators, Quantsapp logo and the indicators, right? So if I click on that, these are the indicators which Quantsapp is providing on a real-time basis, right? So you have all the higher order Greek, which is not the topic for today, but I'll try to cover that also in one of the sessions. And these are, you see, these order book, right? So these are the order book data which I am speaking about. There are, I think, 33 of them, so we cannot talk about all of them right now, but I'll speak about two most important, which you have already learned the concept: buyer initiated trade and the seller initiated trade. So what I'll do right now is, let me just add, so maybe you can note this down if you want to. So I'm looking at order book buyer initiated quantity, right? So even in buyer initiated, I can also track the VWAP. Count means how many people are trying to buy it, so that you know whether there is only one buyer or multiple buyers. Obviously, you don't know the name of who is buying, but at least how many people are basically buying, how many unique orders are there. So I'm interested right now in order book buyer initiated quantity. Okay, so I'll select that. So that is selected. And I'll say order book seller initiated quantity, which is this one. I'm selecting the order book seller initiated quantity, and I'll just say apply the changes. Okay, so if you see, these are not volume. This is basically, this is not the raw volume. This is the quantity of orders. So the buyer initiated trade basically means quantity of orders that got executed at the ask price. And seller initiated quantity means that how much was the quantity that was executed at the bid price. So we can track this kind of in-depth data, and that's what we have plotted. Okay. Now, this is not really readable. I cannot go and compare how much were the buyers and how much were the sellers. So I'll merge this to data point in a single data point, right? So how will I do that? I will do that by saying go to more and move to existing pane above. So what I'm doing is, I'll show it again. If you just scroll over here and go to more, sorry. So if you see, there are 3 dots. Move to existing pane above. So now we have both the indicators in a single pane. Now what we'll do is, if you see, there are still 2 different scales on the right hand side, which we don't want. We want a single scale. So I'll right click over here and I'll say merge all scales into on the right. Okay. So now we have a single scale, so that we can compare how much were the buyers and how much were the sellers. But still this data is not very readable. So what I'll do is, I'll click on settings and I'll change the seller color to red, and I'll make it a line chart and click on OK. The same thing we will do for buyers, where I'm making it green, clicking on the line chart and pressing OK. Now we have our indicator ready. So this is much more readable, and I can directly see that at this point the sellers, which is the red line, which was significantly higher. So after doing this, you can also save this. So if you want, you can go and save this layout, right? So if I click on save, this is automatically saved. So later on, whenever I want to retrieve it, I can go to load chart layout, and you can see that the buyer seller initiated, this indicator that I created is already saved, right? So if I double click on this, this chart will again reload with the same setting that you have created, right? So you just have to do it one time, and then you can go and load it, save it, and then load it back from there whenever you want. Now I'm looking at a 1 minute chart. So if you see this, I'm looking at a 1 minute chart, but this is not updated at 1 minute. This is just a 1 minute candle, but updated real time, right? So that's what I'm looking at. So continuously you'll be able to see this data, but I'm just trying to look at it on a 1 minute. That's my preference. Somebody wants to look at 1 second, you can go and look at 1 second also, right? So if you want absolute real time, and let's say if you are able to read that kind of a data so fast, you can do 1 second also, but my best time frame that I look at is a 1 minute chart. Okay, so let me now show you the concept of how we will be basically using it. So if I show you first, let me show you a consolidation and then a breakdown so that you understand this concept better. And then I'll show you that even on a continuous trend also, you can go and execute it. So if you see around this area, when Nifty on the last trading day was consolidating, right? So if you see this, Nifty was fairly sideways. And then around this area, you saw what happened. So let's understand what basically happened. So what was the average? So if you see on the right hand side, you can see the average quantity that was getting traded on bid or on ask was roughly around 5,000, right? 5,000 quantities were getting traded, and the Nifty was sideways for some time from around 10:30 to around 12:30, right? Roughly around that time. And then suddenly what happened? You saw a very, very big seller which sold at the bid price. And how much is the quantity overall? The quantity went as high as 60,000, right? So from 5,000 quantity that was generally getting traded, suddenly you see a very big spike, and that quantity becomes 60,000. The 60,000 quantity is now traded at the bid price, right? So this red is significantly higher. It basically means that now the trend of this breakdown is confirmed, and the trend has already broken, and you can go ahead and take a sell trade, right? So on this candle, when this breakdown is happening and this volume is confirming on the bid, not just the raw volume, but the volume on the bid is confirming, which is the seller initiated trade, then you will go and basically have a signal that you can sell it. And then you can see consistently. So you have again, after a few moment, you saw that there was a big red bar. This was green, but then which means that the buyers were more, but it was not higher than the last aggressive sellers. So we will ignore this, right? So the way that I look at it is that if there was an aggressive selling, then you can see again the next peak of sellers is around this level, right? Significant peak. So unless buyer comes to that level, which is higher than the previous peak of the sellers, right? Till that does not happen, the trade will still remain on the downside, right? And this breakdown will be valid. So you can see that there was a breakdown. This was the trade. Continuously you have sell, 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 again sell, again sell. And this was the point when you can say that, the buyers are now slightly not, it has still not crossed the previous peak of the sellers, but approximately around this or this level, you can say either this peak or this peak, both of them are valid, because any which ways this will happen after a fairly good amount of time, and your trade is already profitable most of the time by then, right? So around this, which did not cross the previous peak, but this definitely crossed the previous peak. So this is the proper exit when the exit came, when buyers bought too many quantity on the ask price, which said that, okay, now this downtrend is negated. Okay. So if you see this, the sell signal was around 17,420, and the short covering, or maybe when you should cover that short, is around 17,330, right? So roughly around 100 points is what you have got in this trade by just following a very, very simple theory that the market was sideways. Suddenly a breakdown happened. You will believe this breakdown. Why? If you see, the market slightly pulled back, but it never crossed the previous swing high also. So the market slightly pulled back, but still you know that this is a genuine breakdown. How do you know that? Because you can see that there was too many quantity that was sold at the bid price. And you can say or conclude that the sellers were very, very aggressive. And this is how you get a sell signal. And then unless and until the green or the buyer initiated trade crosses the previous peak of the seller initiated trade, you will not exit that trade, and you can remain in that. Obviously, you can book partial profit and do the trade management. That is okay. But the signal will be around this area when you can see that the buyer has crossed the previous peak of seller initiated trade. And that's when you can say now the trend or the downtrend has ended, and I can go and square off my trade. And obviously before market, because it's an intraday trade that you are taking, so you have to square off your trade. So that's a very, very simple example. But as I said, that is not necessary that we do it only on sideways market or a consolidation and then a breakdown. Not necessary. We can also see that when the market opens, even if it is in a trend, right? So around this level, when the market opened, right after the opening, you have a big quantity, and over here, you have sellers obviously, which is more than the buyers. So if you just go and if I just show you this, sellers are more than the buyers, but the buyers are also decent. So maybe I will not go and take a trade immediately after opening because both of them are equal, even though sellers are slightly more, but kind of equal. So I'll wait for a confirmation that, sellers are more aggressive compared to buyers. So if you see, after some time, around this level, you have a very, very clear indication that sellers are significant and buyers are not there. Okay, significant amount of selling and buyers are not there. This is the precise time when you will have a trade and you will say that, okay, I will go and short this instrument. And obviously it is Nifty. So 17,525 is roughly where you'll be selling this. When what happened is, you can see on the pane below that the sellers were how many times more? So approximately 25,000 quantity was being traded, and suddenly the sellers became 1 lakh, right? 4 times increase in the number of sellers selling at the bid price. So significantly high amount of sellers, and that's when you will go and sell Nifty at 17,525. And if we see later on what happened, again a huge sell-off. The green bar or the green line never went up, right? So consistently you can see even around this level, huge sell-off, and the green line is never attempting to cross the previous peak of the red line. So even around this, you can see that it was absolutely sideways, then again sell-off, again sell-off. This was decent, but it still did not cross the previous peak, right? So we will still be in that trade. Again sell-off, 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 sell-off. This was still not higher than the previous point, and finally around this level, which is 1526, just before the market closing, you have the buyer initiated trade higher than the previous peak. This was the previous peak of seller initiated trade, right? So higher than the previous peak, and that's when you'll be basically closing your trade, and this level is 17,330, which basically means that you have a good 200 point on Nifty in intraday by using a very, very simple thing, by just tracking how the buyers are placed and how the sellers are placed. So a decent 200 point movement is what you can capture. Now, the same thing. So what I can do is I can go and plot a futures chart and look at the indication and then take a option trade based on these signals. That is also possible. Or what I can do is I can also go and do the same thing on the option price as well, right? So around this level, when the signal was there, then 17,525 was the Nifty, right? So maybe what I can do is I can also look at how the option is placed. So I'll type the expiry 29 September 22, 17,500 put is what I am interested in buying on that sell signal. So I'll go and plot that put option. So you can do the same thing on the put option prices also. Now notice this time I'm buying put option, right? Even though it is put, which basically means a bearish view, but I'm buying a put option. So I need green bar, right? So that I want to see how many people are basically buying the put option at the ask price. So I want the green ones to be higher. So when was that? You can see this was the point when the green was significantly higher. And this is the same time when we had that signal on the Nifty futures also. So what is the option price around? So roughly around 150 is the option price when this signal came. And then you can see that the green was higher, then again the green line is higher, which is basically the buyer initiated trade, which is higher. Consistently it is high. At this level, you can see that there was a red bar or maybe a red one, but it is still not higher than the previous peak. Green around this level, you can see again the green has a peak. And this is a precise level where you have the seller initiated trade, which is crossing the previous peak of the buyer initiated trade, right? So around this level is when you get a exit signal. So what is that level? That level is roughly around 300 rupees. So you can imagine the kind of keeping it so simple, but still buying an option at 150 and the exit signal comes at 300 rupees, right? So the option doubled and you have 100% return in this trade at least, not always you'll be getting 100% return. Obviously, some trades might go wrong, but generally I've seen that this data works very well. So you'll have a very high strike rate. I in my case, looking at some past historical things, I've seen that most of the time this indicator is right because it's a very simple thing. It's just telling you where the buyers and sellers are, then you're participating with the market rather than anticipating anything. And you can see that in this case, the option clearly doubled. So if you're an option writer, maybe whenever this kind of a movement is happening, when the buyer initiated trades are super aggressive, then maybe you would want to just exit that option. If you don't want to buy it, at least exit it so that you don't make a huge loss. And you can see that you could have saved a lot of money by. So even if you are doing a ATM straddle or a strangle, you can plot both the option charts and you can notice whether how the buyer and seller initiated trades are moving. If you see the buyers aggressive, you can exit your trade. Is basically as simple as that is what you can implement. So let's look at I'm so confident about this data that we can just randomly look at anything, but let's look at your favorite, which is BankNifty, which is not just your favorite, the entire world's favorite, because this is the highest traded index option in the entire world, right? So if we look at BankNifty futures, then we can see around the market opening, this was the point when, not obviously at the opening, but slightly after that, around this point, which is 40,200, when you saw that sellers was very, very aggressive and a huge quantity was basically sold at the bid price, right? So you get a sell signal around this level at 40,200. And then this area, if you see, is higher than the previous peak of the seller, right? So in BankNifty, you had an exit also coming in after some time, and that was roughly around 39,825. So roughly around 200 points on BankNifty, which is a decent enough move, is what you have immediately. And then again, you have a trade around this level when the seller initiated trade from roughly 2,000 quantity was being traded, and suddenly you saw 30,000 quantity getting traded. So more than 10 times is what the volume on the bid has spiked, which is the seller initiated trade. So you can again reinitiate this trade around this level, and then you can see there was basically no exit. So around the closing, you'll again square it off. So the entry was around 750 and exit around 600. So again, 150 points roughly. So 150 plus 400. So even if we round it off, 500 points on BankNifty in intraday, right? By just looking at this simple data. And then you can do the same thing. You can go maybe and plot a option chart. So at that point, maybe I'm interested in a 40,000 put option, right? Which is the nearest ATM round figure, which will be the most preferred strike to choose. So you can see that on basis of when the future signals came, you can go and participate that data also in options. So around this level is when you'll be participating, which is slightly higher. This option gave you slightly late indication, but around 520. And then the exit never happened in this case. So it happened once around this level, which was 625. And then later on, towards the market close, you'll square it off. So roughly around 700, which is again a decent enough move because around 200 point on options is also a decent enough move, which you can go and capture, right? So if you see this entire data, it's let me just summarize it, or maybe let me show you one more stock of how you can do the same thing on stock. I'll just give you an idea of how you can do it. Obviously, you can go and try this on Monday, and anything that you open, I'm confident that this is working. So if I just look at Canara Bank, because that is a trade I remember from Friday, right? So after the opening, what happened to Canara Bank around this level? You can see that there was a very sharp sell-off. The average quantity was 17 or 15,000 roughly before this happened, but suddenly 130,000 quantity started trading on buyer initiated trade around this level, which is 238, 239. And then you have this major peak that was there in the buyer initiated trade. So you'll square it off around the level of 235. So a decent 4 rupees move on a low price stock is a fair enough move. Then again, you had a sell signal around the level of 235 at the same level basically. And then you never had an exit. So you'll carry it all the way towards the close up to 229. So something that was sold at 239 all the way to 229, you have a decent 10 rupees move that you can go and capture, right? So this is how you can go and trade this. Maybe you can plot the option data also. So 29 September 22, if I plot, let's say at that point, I'll be looking at a ATM strike put option, which is 240 put option. So if I go and plot this and take a trade, so you can see very clearly the options that was trading at a quantity of 1700 got traded 1,27,000, significantly higher at the price of how much? 5 rupees 75 paise is when the buy signal came, and then there was no sell signal. So you can see that you will carry it all the way to the close. 1290 is when it closed, where it closed. So 1290, if you see, let me just calculate how much roughly that return is. So 7.4 rupees return. And what is the lot size of Canara Bank? Let me just check that. I don't remember it. So the lot size is 2,700. So multiplied by 2,700. So even if you bought one lot, 20,000 rupees, and let's say if you're buying 10 lot, obviously 2 lakh rupees on just a single trade. And the investment is how much? The investment in this case was 2,700 multiplied by 5.5 multiplied by 10. So maybe 1,50,000 was the investment, because buying option is obviously cheaper, and you have almost 2 lakh rupees profit in an intraday trade. This was a good trade. Sometimes obviously you'll be making less money. Sometimes you might be losing money also. But generally we have seen that, if you don't go and predict anything and just follow the market, because you're not going and creating a forecast, you are just doing what the market is basically doing. You are just copying what the market is doing in a very sound way. Most of the time you'll see that this kind of a trade will be working fairly good. So let me just summarize what we have learned. Okay. So on a in-depth data analysis, if you see so this kind of a data which the prop books or institutions use, similar kind of a data now can also be used by retail traders. How you can use it? Obviously, inside Quantsapp, we have this buyer-initiated, seller-initiated trade. There are many more things. You can also track how many orders new are coming in, how many orders are getting cancelled, what is the new order VWAP that is coming in. There are many more things that you can obviously do, but using very simple two indicators, which is buyer-initiated trade, seller-initiated trade, which is telling you how much is the quantity that is traded on ask, is called a buyer-initiated trade. How much is the quantity that is getting traded on bid is called a seller-initiated trade. And if we plot both of them, whenever there is a spike means what? That the, let's say, quantity that was getting traded at the bid price doubles or triples, right? And you see a big spike on the chart. That is when you get a signal that, okay, this instrument is now going down. And you can either trade futures or you can plot the same thing on an option price. My recommendation will be that go and take the ATM option, okay, because that will give you, generally this in a Greek term, this is a gamma trade. So that will give you the best profitability because of the fast movement that is going to come, because gamma is highest for at the money option. And you can take that trade, and then whenever you see that the contra data starts forming, which means that if you have sold something, then the buyer initiated trade on the futures have started increasing. At that point, you can go and score off. And obviously, you can put your trade management or booking partial profit if you're making a decent money, and then you can trail your stop losses. So all those things will apply. And this is how you can go and create an intraday trade, which is so easy to do. Anybody using this, I'm sure if you just look at this data for 1 day or 2 days, you'll get a hang of it and you can directly follow it. Easy and simple to understand. And you can start trading like a pro, and you can, use this for an intraday trading for yourself. And obviously for option sellers also, you can use this data to manage your risk, where if you have sold some option, keep a track. So if you're using Quantsapp, this data, so basically you can open 4 screens or 4 tabs at the same time. So you can put your sold straddle or sold triangles on multiple screens, and then you can see if there is a big buyer which is coming in, then you can square off your option trade. This way you can save a lot of money, at least in your option trade also. So that's it from my side. I'll take up a few questions that you might have, and whichever platform you have joined us on, maybe YouTube, Twitter, or wherever you have joined, you can just place your post your questions in the Q&A or in the chat, and I'll try to take a few of them and I'll try to answer a few of them. But meanwhile, till the team consolidates that and sends it to me, I would request that you can subscribe our channel, the basic things, and like the video if you really liked it, and share it with others also, so that others also can learn from this kind of a data. And next time, if you want to learn something, some specific topics from me, you can also post that in the chat as a recommendation. So the next webinar, I am thinking, we have recently launched a tool on option scalping. So maybe the next webinar will be on that pretty soon, and I'll take that also up on one of the weekends. So I have the questions, a few questions with me, so I'll try and answer some of them. What is the difference between buyer initiated order and new buyer order? Okay, so the new buyer order basically means how many new buyers are coming in. Okay, so that new buyer might be at any price. It might not be at ask. It might be at bid, or it might be lower than the bid also, right? So the new buyer order quantity is telling you how many new buy orders are coming. Whereas the buyer initiated means that it converted to a trade at the ask price. So that is buyer initiated trade, and the new buyer is just a new order is coming in on the buy side. And the difference between, so somebody has asked the difference between quantity and count. So quantity is, let's say there are two orders which was entered in the system. One was for 10,000 quantity, second was for 20,000 quantity. So what is the count of orders in the system? 2. So that will tell you what is the depth, how many people are participating. So 2 people are participating, whereas the quantity is 30,000. So if you want more minute insight of what is the kind of depth, is it just one person who is trying to participate, or there are more people who are trying to participate? So you can also plot the count and the quantity. Count is how many orders are there. Quantity is the sum of all the quantity of all these orders, is basically the difference between quantity and count. So what is the difference between volume indicator and order book? So volume is just trade, right? So if a trade happened, it is the volume, but it does not tell you whether it was initiated by the buyer or initiated by the seller. Why do I say that? Because as I said, if there is an order book, the order book is standing. Unless and until the buyer increases the price or seller reduces the price, or a new buyer comes and a new seller comes, it will not convert to a trade. So volume will just tell you that, okay, one quantity got traded. But that does not give you any insight that it was traded because of whom. It was either because of buyer or seller. So who was aggressive, right? So that's the difference between volume and this order book data. Okay, so that's a good question. The third one is that do we have a scanner to scan stocks which are witnessing this kind of a momentum? So right now we don't have it, but very soon we are building that also up. So very soon you will have that in our system, where you will have a screener where you can see that wherever these kind of movements are happening, it will directly tell you that this is the place where you can maybe go and check for participation. But for now, what I will recommend is that at least Nifty Bank Nifty is the favorite where most of the volumes are. So you can open one tab Nifty, one tab Bank Nifty, and whenever you find an opportunity, you can go and trade it, and your favorite stocks also if you want to do that. But very soon we are also coming out with a scanner which can scan and tell you that this is where the opportunities are. Okay, so the fourth question is how to put a stop loss for all the scalping tools. So that's a pretty fair thing. So if you are, let's say, taking, so in the Nifty example, when we bought the put option of 17,500 at 150 rupees, all you will do is the previous swing. So let's say on futures, if I talk about, because it was a sell trade around 17,525. So whatever was the previous swing high, so very simple concept of higher highs, higher lows, and lower lows, lower highs. I think everybody might have already heard about it. I don't need to explain that. You can just keep the previous swing high as the stop loss, as simple as that. And you can just go with that. So it's a very simple thing. You don't have to over engineer it. You can just take the swing high or swing low as the stop loss. So the fifth question is how to use the buyer to seller initiated ratio indicator. So ratio is also very similar to what we have seen, where instead of looking at the absolute quantity, you can also plot the ratio of buyer to seller initiated quantity. But sometimes, if you think of this, that if there was 1 lakh buyer and 50,000 sellers, which is significant, but at some point there were 100 buyers and 10 sellers, the ratio in the second case is much higher, but that is not a trade, right? So people who want to simplify this can also plot ratios, but do also look at the quantum, because without the quantum, it will not tell you even if the ratio is very big, but is it significant in terms of quantity or not? So you can also use the ratio, but at the same time, also keep the quantity handy so that you have the quantity and the ratio. So ratio will directly show you if there's a spike, and then you can reconfirm whether the quantity is also getting traded or not. So how to use the buy to seller? So I've answered this. And the final sixth question, I'll just take one more. So is there a scanner that indicates extraordinary movement? So I think it's a repetitive question. So any which ways I've said that we are very soon coming out with a scanner also, which can show you these kind of opportunities where you can go and participate, right? So it's fairly easy to use this tool is what we have learned. You can everywhere else in the application also. So if you have missed something, you can just go back and look at this video again if you want to. And as you sign up to the application, or if you have not already done that, then you get a 7-day trial as well, where you can use this data and you'll be able to explore how to, really go and take a trade. And it's very easy to, no Greeks, no complication of options, very simple demand supply, and based on that you can go and take a trade. So thank you very much for joining today in this webinar, and I wish you all the best for your trading. Thank you.